almost $5 a gallon at the gas station. Your grocery bill has doubled, and interest rates are potentially going up to try to curb this inflation. Let's talk about how that affects the housing market. All right, guys, today Jonathan and I were talking about Feds raising the interest rates. So they came out saying they might increase interest rates another 2%. So how is that going to affect you as a seller who's thinking about maybe listing in the spring, summer, or fall? And how is that going to affect you as a buyer who's thinking maybe we're going to wait? So let's get into it. All right, so guys, before we write this down and get into the nitty gritty, let's go talk to a lender across the hallway and see what current interest rates are. Hey Mike, how you doing?
Good, how are you?
Hey, so quick question. I just need interest rates, very generic. What is a owner-occupied interest rate and a non-owner-occupied interest rate today?
Okay, today we'd be looking at 5.5% for a single-family dwelling, owner-occupied purchase transaction.
Okay.
And for a single-family dwelling investment property purchase, we'd be looking at about 6.25, and that would be coming with some points to get that too.
Awesome. Thanks, Mike.
Yep, you're welcome.
All right, let's go back to the drawing board and see what happens.
Thank you.
Okay, so as of March, the median sales price of Ada County was $575. So that's what we're gonna base everything off of. We're gonna do 20% down, so that way we don't have to try to calculate PMI. I don't even know how to calculate PMI, so 20% down, which means that our loan amount is gonna be let me go back to my cheat sheet. We're gonna be $460. So $460K is gonna be your loan amount. That means you're gonna have to bring in about $115,000 as your down payment, okay? So let's get started. So we have the owner-occupied right here. So OO is gonna be for our owner-occupied. The non-owner-occupied, our non-owner-occupied, that's gonna be two categories. That's gonna be investment property and that's gonna be your secondary home. Because keep in mind, as of April, they changed the law and non-owner-occupied includes second homes now. And so you're gonna have pretty much the same rate as if you were going to buy it as an investment property. So let's go ahead and break this down here. So when we talked to Mike, he said as of today, very generic, we're going to be looking at maybe a 5.5% interest rate. At a 5.5 interest rate, just principal and interest. So keep in mind, principal and interest, that doesn't include your property taxes and your property insurance or any HOAs. So at 5.5%, we're looking at $2,611 a month. Okay? If you were to buy that same house, $575,000, if you were to buy that same house a month ago, or let's say 2 months ago, you were going to be locked in at 3.25 roughly, give or take a couple interest rates. That same house, that same purchase would be $2,002 a month. Again, not including principal and interest. Okay, this is just principal and interest. If the Feds raise the rates up to 2% by the end of summer, we're gonna be looking at 7.5%. So the same house, again, same house right here, same house, the principal and interest payment on that house is gonna be $3,216 a month. So, although we're at the very record low interest rates, right? Record low, everybody says record low. We used to pay 15%, whatever. Within the last 10 years, we are at record high interest rates, and we could be at another even more record high within the last 12 months. And so, bringing this down, how does this affect you? But before I get into that, let me go into the non-owner-occupied. So this would be investment homes, this would be secondary homes. Right now, Mike gave us a 6.25 interest rate. This is paying points. Now again, if you want to know more about points and how points affect your loan, there's going to be a video next week on how we're going to bring in a lender and he's going to explain how points work and affect your interest rate and your loan, closing costs, etc. So make sure you hit the subscribe button to get that notification on that next video. So 6.25 on investment property. That house, again, based off of the 575, 20% down, 460, you're going to be paying $2,832. So a couple months ago, that would be 4.25. Okay, 4.25 interest rate puts us at $2,263. Keep in mind, this is a month. If they continue to rise, we're going to put in here 8.25 interest rate. That gives us 3,400 and some change. Okay, so let's break this down, and why are these numbers important, and why as a real estate agent do we pay attention to the interest rate, especially if we're going to list a house or if we're consulting with somebody who's going to buy a house. So right now we're going to just talk about if you're thinking about listing your house. Some people come to us and they say we're going to think about listing in the summer, and this is what we just want to help them be mindful of. If they wait till summer, and let's say the feds do raise their interest rates to 7.5%, another 2% by the end of summer, you got to understand that somebody who could have bought your house in January, we have just eliminated a good chunk of people who could buy, because the mortgage itself has increased a minimum of $1,200 for that primary home buyer. That doesn't sound like a lot, but $1,200, I mean, it's sad to say, but that's a new truck right now, right? That's a couple car payments, that's somebody's grocery bills, that's somebody's private school tuition. So that can be a huge factor, because right now you just eliminated a handful of buyers who maybe could have afforded it here, but now they can't afford it. And so even in today, right, $600, that's somebody's grocery bill a month, and it could eliminate them. Something else that we're going to talk about, we have Jonathan's going to be interviewing a lender on, is how do these ratios work? Because there's a front end ratio and a back end ratio, and he's going to bring that in. So again, remember, hit the subscribe button so that you understand how does this lending world work, how do the approvals work. So again, why this is important is you have a front end ratio and a back end ratio. We're going to have a lender explain it, but in short, because I'm not a lender, but in short, the lender's going to look at how much can you afford based off your income if you just had your house payment. And then the back end ratio is all your debts and the house payment. But we're going to get a little bit more into that later in a different video. So again, hit the subscribe button, and when Jonathan interviews him, you'll be able to learn more about the front end and back end ratios and why that's important when you're looking at either buying or selling a house. Scrolling back to the board. So right now you've eliminated certain buyers because of a $600 price increase in a monthly mortgage just by waiting 2 months. So if you wait another 3 months, 4 months, you could be eliminating another section of buyers. Again, we're not talking about cash buyers. Cash buyers, it doesn't matter about the interest rate, but it does affect your person who's financing. And if you can't come up with the 20% down, then these payments are going to be even higher. And so these are just, again, something that we're mindful of when we're consulting with somebody who's buying a house. Now, the non-owner occupied, this is something else that we're paying attention to. Because why are rents so high? Why are rents so high? One reason why rents are so high is in order for an investor to buy a property, and again, we're just talking about single family here. We're not talking about multifamily. We're not talking about commercial loans. We're just talking about single family using a conventional loan, 20% down. If you were to buy a $575,000 house as an investment, then that investor minimum, because this doesn't include tax and insurance, minimum they're probably going to have to charge for that house maybe around $3,200 just to break even. That's not even cash flow. So we cry about how high rents are. Well, one of the reasons why rents are so high is because of demand. The other reason is somebody who's closing on a property, they have to charge a certain amount so that they are breaking even on their mortgage alone. And so if rates increase even more, well, then we're looking at potentially a higher interest rate, or more investors maybe moving out of our market and going into another market that's more affordable. And so that's just something, again, that we're keeping in mind. So what does this mean? Again, as a seller, waiting to list your house in the summer may not be the best choice for you. it may be worth it to put your house on the market now rather than waiting, because we want to capture as many buyers as possible for that house to get you top dollar. And what does this mean for a buyer, right? So we have a lot of buyers that say, what should we do? Or should we buy right now? Should we sell? And we don't know that answer. In order to know that answer, we got to ask you some constructive questions, because everybody's situation is different. And for you, it might make sense to buy a house right now, but it may not. But until we ask those questions, it's hard for us to really actually give you a good, solid advice on it. So let's just say after consulting with you, you said, hey, yes, today is a good day to buy a house. And what does this mean for you? What this means is if you buy a house today, you can afford this. And if you wait in a couple months, that house that you could have bought at $575, you may not be able to afford anymore at $575. You might have to drop down to a $400,000 house, which right now, $400,000, you're buying a 3-bedroom, 2-bath in Nampa or Caldwell. If you're a buyer and you're building a house, so some people have started a contract 6, 10, 12 months to build. You want to ask your lender, or you want to find a lender that will be able to lock in your rate. Give you a real life example. We had a client, they locked their rate 3 months ago. Their rate is somewhere around the 3%. If they were to lock that same rate today, they're going to be at 5%. Completely different mortgage payment for them and their family. So they were able to get a home at a mortgage payment that they're comfortable with. And so keep in mind, if you're thinking about building or you're already under a build job, lenders are doing extended locks. So you need to ask your lender, can we lock? How far out can we lock? And if they can't give you a rate lock for more than 90 days, you might want to ask somebody else. Again, we're just here to educate you. We're not trying to scare you. We're not trying to push you one way. So guys, again, we're not here to scare you. We're just here to educate you, to help you ask the right questions to your realtor if we're not your realtor, but then also help you figure out what is the best scenario for your situation. So please reach out to us. We'd love to help. This year alone, I think we've helped talk maybe 4 clients out of selling and buying because it wasn't the right fit for them. And so we'd love to help you as well.